Hello, everybody. This is Gonzalo and Marc Weissy from Maple Capital Partners. We are going to be showing a two-part video series on why you should be investing in U.S. apartments. The first reason is demographics and why it plays a very important role in understanding the future rental of apartment complexes. We're going to be discussing two of the items below. The first one is millennial homeownership and how it lags from previous generations. The second one is empty nesters, baby boomers essentially downsizing, selling their home and downsizing to more rental property. The below is a graph as to the importance of these generations that we'll be discussing. Baby boomers in blue, the largest generation, followed by millennials, Gen Ys, and then Gen Zs. This graph gives you a pretty good understanding as to home ownership rates and how they have declined from different generations. Baby boomers, one of the largest population, had a pretty high home ownership rate. And as you can see down here, millennials and Gen Z is not on this graph, but we can also state that it's going to be essentially the same or lower than millennials. And home ownership rates are fairly low as they go into their prime buying years.
So today, more so than ever, many millennials are expecting to rent for the rest of their adult lives. That's a startling number, going from close to 11% just 3 years ago to 18% in 2020. It just nails home the fact that millennials are renting in higher numbers and do expect to for the foreseeable future.
This chart here gives you a pretty good understanding as to what is going on in the background. As student loans continue to burden this generation, as you can see there in the graph, it moves to the right, larger and larger student loans versus home ownership rates, which is in the red line. It's an inverse relationship. As more people obviously have more student loans to pay back, it becomes less affordable for them to purchase a home, pay for a mortgage.
So moving from millennials, which Gonzalo just discussed, to the other side of demographics, the baby boomers, who are giving up their empty nest to go back to renting in droves. And this perhaps a greater surprise to demographers and economists, because traditionally in previous generations, this demographic have stayed in their homes. Baby boomers are redefining what retirement means in that they're choosing an active lifestyle, and many are even going back to urban environments to live closer to culture and amenities now that they're untethered from their children. You can see from this chart that US rentership amongst millennials has gone up in every year surveyed, and this goes up to 2014, but since 2014 it's continued to grow pretty precipitously.
And this is one of the many important graphs we're going to show you, because as we discussed previously, the baby boomer generation as well as the millennial generation are two of the largest generations. Therefore, if they're both moving to more of a renting base, it's really going to increase apartment demand in the future.
Absolutely. So as I mentioned, they're choosing more active lifestyles. They're valuing mobility just as the millennials are. With their children grown and out of the house, many have realized that they no longer want or need a large suburban home. Instead, they're opting to rent in these urban environments that offer greater flexibility for travel, as we mentioned earlier.
This is the number two reason, pent-up demand. The number of young adults living at home has continued to increase. This increase began to accelerate during the depths of the Great Recession, as more and more new graduates faced the weak economy, as we've all experienced back then. This created what you've heard being called as the boomerang effect, meaning these people will move out of the house and then move back with their parents. So as the economy moves forward towards a full employment and wages continue to increase, it's anticipated that this pent-up demand, essentially millennials living at home, are now going to be translating to over 3 to 4 million of additional rentals, meaning they're going to move out of their parents and rent their first apartment. So that's going to increase the demand. This is going to be a significant amount of potential demand, especially since new and annual supply and averages are close to 325,000 units per year, new construction, versus a demand of 3 to 4 million of additional renters.
Yeah, so these charts here are just demonstrating what Gonzalo spoke about. The one to the left is just showing that despite millennials being the largest generation, they have a lower number than previous generations of people heading households. What does that mean? Basically, millennials are either living with their parents to a large degree or living with roommates. So they're bunking up. On the right, that's also demonstrated by this chart, which compares 2005, and the darker the colors there are, the more percentage of that 18 to 34 demographic living with their parents, to 2015, where a much larger percentage of millennials are living with their parents. So number three reason why we believe that US apartment investing is so attractive is that barriers to homeownership remain high, meaning that there will likely be more rentership in the future. On the chart below displays the housing affordability index from 1990 to today. The higher number, the more affordable that index says that housing is. So today you can see that housing is relatively less affordable compared to the years coming out of the Great Recession. Why is that? Housing prices have gone up pretty steadily since that point. Not to mention the fact that millennials have a much higher debt load than previous generations. According to the Federal Reserve Bank of New York, student loan balances held by those aged 30 and younger have ballooned by more than 1/3 over the previous 10 years. The ability of these households to service debt and a mortgage is limited and serves as a strong constraint to saving for a down payment and home ownership. In addition, student loan debt as a percentage of total debt, household debt, is approaching 10%, almost double the rate from a decade earlier. So all of that debt is stunting the growth and household formation of millennials, as indicated by this cartoon here. So the previous factors that we spoke about that are driving the US apartment market are that demographics are driving rentership. There is a pent-up demand of millennials living at home. And number three, the barrier to homeownership is quite high at this time, meaning that it's going to force more and more people into renting for a longer and longer period.
So we hope you enjoyed this first part video series on why you should be investing in US apartments. And as we always say here, Maple Capital Partners, be kind, be charitable, and invest wisely. Thank you.